Welcome back to the Pro Ticker Podcast, everyone. Your Wednesday morning edition covering major financial magazine headlines.
Always an exciting day when we get to dig into these.
It is, yeah.
Yes.
I love seeing what you've pulled together. And today's stack is particularly interesting. We've got CNBC live market updates, some Wall Street Journal intrigue,
Oh, yeah.
even a peek into the world of instant noodles, courtesy of Bloomberg.
That's right. Gotta love a good noodle story.
Right. Okay, so first up, let's set the scene with the Asia-Pacific markets. CNBC's live coverage gives us kind of like a snapshot of 2 days, February 24th and 26th. What jumps out when you compare those?
Well, the 24th was rough. A bit of a domino effect from Wall Street's worst performance of the year. Most Asia-Pacific markets kind of tumbled. But then by the 26th, things were more mixed. U.S. consumer confidence readings seem to be playing a big factor there.
Yeah, and on the 24th, CNBC points out the Australian S&P ASX 200 as a standout. It actually broke a 5-session losing streak. Why might that be?
That's a great question. It's a reminder that even within a broadly negative trend, you can find these pockets of resilience. There's always, specific factors influencing individual markets. Without more information on Australia, it's tough to say for sure, but perhaps they had some positive domestic news that countered the global downturn.
Interesting. And then on the 26th, Hong Kong had this dramatic finish. Their Hang Seng Index surged 3.63% in the final hour of trading. CNBC says consumer and technology sectors were leading the charge. Any thoughts on what fueled that sudden burst of activity?
Well, their budget announcement, which CNBC also mentioned, their plans to become an AI hub that likely got investors excited, it shows how government policies can have a direct and immediate impact on market sentiment.
For sure. So overall, kind of a mixed picture in the Asia-Pacific region. Now, zooming in a bit specifically to Singapore, their inflation is making headlines. What's the story there?
Good news for Singaporeans. Inflation has slowed to its lowest pace since February 2021, according to government data. Both headline and core inflation came in lower than anticipated.
Which is a welcome development with so many countries struggling with cost of living pressures. You mentioned a 2025 budget.
Yeah.
How does that tie in?
Well, it's all connected. Singapore just unveiled its 2025 budget, and a big focus is combating those cost of living pressures. It'll be interesting to see how their specific measures impact inflation going forward.
Definitely. Okay, moving on to some specific stock movements. Olam Group caught my eye. Their shares surged. What happened there?
They announced the sale of their remaining stake in Olam Agri to Saudi Agriculture and Livestock Investment. That's a major deal.
Yeah, and a clear example of international investment flowing into the agribusiness sector.
Absolutely. Now, on the flip side, we've got Perpetual Teen. Their shares fell after talks with KKR about selling their wealth management and corporate trust units were terminated. A potential $1.4 billion deal gone.
Wow. Why do you think the deal fell through?
CNBC doesn't give us the specifics, but Perpetual did state that it wasn't in the best interest of their shareholders. So that could mean anything from disagreements on price to concerns about strategic fit. These things happen. It's just the nature of these high-stakes negotiations.
True. Okay, shifting gears to the electric vehicle market. This is always an interesting space. CNBC highlights XPeng and Li Auto, both Chinese EV makers rallying while Tesla's stock dipped. What's your take?
I think it's a reminder that even the biggest players can face headwinds. Tesla's market cap even dropped below $1 trillion. Meanwhile, Li Auto launched its first all-electric SUV, and that generated some excitement. It's a dynamic market with lots of innovation and competition.
Right, and for someone following this sector, it's a sign to look beyond the established names. There's constant disruption happening. Speaking of companies facing challenges, what's the story with Palantir Technologies? MarketWatch says their shares are significantly off their recent highs.
Well, investors are getting spooked by a combination of things. A new stock sale plan from the CEO and the possibility of defense budget cuts.
So a double whammy of potential negative news. And this ties into a bigger trend, right? MarketWatch also points out the Magnificent Seven, that group of mega-cap tech stocks. They're having their worst day since December 2024.
It seems even the giants can stumble, and when they do, the whole market pays attention. It's a good reminder that past performance is not necessarily indicative of future results.
Absolutely. Now let's talk about a company that's been making headlines for some strategic shifts, BlackRock. The Wall Street Journal has a fascinating piece on their evolving approach to DEI, diversity, equity, and inclusion. What caught your eye in this article?
Well, the shift in their language. If you compare BlackRock's 2021 annual report to their most recent one, they've noticeably removed specific DEI-related statements and metrics. That's a big change for a company that was once a very vocal champion of DEI.
And the Wall Street Journal also points out they've amended a credit facility that used to link lending costs to DEI achievements. It's a pretty significant move.
Yeah.
What do you make of this shift?
Well, it seems they're distancing themselves from the DEI movement. It reflects a broader trend we're seeing with companies reevaluating their DEI initiatives. There are a lot of factors at play here: political pressures, economic concerns, even evolving societal attitudes.
So it'll be interesting to watch how this plays out, both for BlackRock and for the broader corporate world.
Definitely. This is a story with a lot of nuances, and it'll be fascinating to see how it unfolds.
For sure. Now, shifting gears again, let's talk about U.S. Treasury yields. MarketWatch says they're falling, which is a sign that investors are getting nervous. What's making them jittery?
Well, several things. MarketWatch mentions concerns about the economic impact of President Trump's policies. But the fact that yields are dropping even with these persistent inflationary pressures is unusual. It suggests a growing fear of recession.
So a potential recession is spooking investors even more than inflation right now.
That's what the falling yields seem to indicate. And that raises the question, will the Fed have to cut interest rates? The market is watching this very closely.
Now, on top of that, there's the debt ceiling drama, adding to the uncertainty. What's MarketWatch saying about that?
They highlight the nervousness among investors in the usually stable T-bill market. Specifically, yields on T-bills maturing in late July and August, when that debt ceiling showdown is expected, are noticeably higher.
So investors are basically pricing in a risk premium because they're not sure if the government will be able to pay its debts on time.
Exactly. It's a sign of how political uncertainty can spill over into the financial markets and make even the safest investments feel a little less secure. And it throws a wrench into that whole T-bill and chill strategy some investors were favoring.
No more chilling, huh? Okay, what about the oil market? What's the latest from Bloomberg?
Oil prices have slid back into the 60s range, largely due to, you guessed it, dour economic sentiment.
Ah, so that poor U.S. consumer confidence reading we talked about earlier is having a ripple effect here, too.
It is. And the American Petroleum Institute's report, while showing a decrease in nationwide inventories, also revealed a rise in levels at the Cushing, Oklahoma storage hub. So that's adding to the bearish sentiment.
Okay, so even though there are potential supply constraints out there, the overall economic concerns are overshadowing them, at least for now.
That seems to be the case. But as always, the oil market can be unpredictable.
Okay, before we get to NVIDIA and those unraveling momentum trades, let's take a quick detour to a story that caught my eye: instant noodles.
Noodles. Always a relevant topic, especially when we're talking about the global economy and shifting consumer trends.
Right. Bloomberg reports that Nissin Foods, the maker of cup noodles, is planning some big investments. It seems like they're betting on the world's enduring love for instant noodles, even amidst all this economic uncertainty.
Well, the company's CEO expressed optimism about continued demand, and they're not just sticking with the classics. They're pushing for healthier variations to appeal to those health-conscious consumers.
So whole grain cup noodles coming soon. Sign me up.
It's actually fascinating how this seemingly simple food item can reflect broader economic and social trends. It really is. Now, speaking of potentially market-moving news, let's shift back to the tech sector. NVIDIA, a bellwether for the industry, is reporting earnings soon, and there's a lot of anticipation.
MarketWatch says option traders are predicting a potential 9% swing in share price. Either way, that's huge. What's driving that kind of volatility?
Well, NVIDIA's influence is massive. Their performance can impact both the tech sector and the broader market, and their position at the forefront of AI technology adds another layer of intrigue.
So their earnings report could be a signal for the health of the entire AI sector.
Exactly. It'll be a key data point for investors trying to gauge where things are headed. Now, on the other end of the spectrum, those high-flying momentum trades that were so popular are starting to lose altitude.
Right. MarketWatch mentions companies like Palantir, AppLov, and Hims and Hers as examples. What's going on there?
Well, they've all experienced downturns recently with different contributing factors. Potential defense budget cuts, a short seller report shifting FDA policies. It's a reminder that momentum can shift quickly.
And MarketWatch specifically points out the role of margin trading and leveraged products in amplifying both gains and losses in these types of trades. So a cautionary tale for investors chasing those quick returns.
Absolutely. It's crucial to understand the risks involved and to have a solid risk management strategy in place.
Speaking of risk management, this is something I've been thinking about as we've gone through all these headlines. It seems even those seemingly safe havens are experiencing some volatility.
Oh yeah, you're talking about those T-bills.
Yeah, because of that debt ceiling fight. It seems like a pretty big wild card right now.
It is. It's injecting uncertainty into a market that's usually considered very stable. MarketWatch points out that yields on T-bills maturing in late July and August, right when that debt ceiling showdown is expected, are noticeably higher. Investors are essentially demanding a higher return to compensate for that perceived risk, even though a default is considered highly unlikely.
So even T-bill and chill isn't so chill anymore.
Not so much these days. But hey, let's switch gears for a moment and talk about something a bit more positive. Bloomberg highlights Nissin Foods, the maker of cup noodles, and their plans for some significant investments.
Instant noodles, a true sign of the times. It always amazes me how certain products seem to thrive no matter what's happening in the economy.
It's comfort food, it's affordable, and it's surprisingly adaptable to different cultures and tastes. Nissin Foods CEO even expressed optimism about continued demand, and they're expanding their offerings beyond just, the classic cup noodles. They're pushing for healthier variations, appealing to those health-conscious consumers, and reflecting those evolving trends.
Makes you wonder what the future holds for instant noodles. Maybe gourmet organic ramen will be all the rage.
Perhaps, but let's not get too carried away with our noodle dreams just yet. We have a lot more ground to cover. And speaking of covering ground, remember those weekend election results in Germany from Bloomberg? The conservative Christian Democratic Union, along with their allied Christian Social Union, they secured the largest share of votes with Friedrich Merz as their chancellor candidate.
Yeah, a significant shift in the political landscape.
It has interesting implications for the German economy and their role within the European Union. Bloomberg quotes Michael Field, chief equity strategist at Morningstar, suggesting this outcome could be a boom for the struggling German auto industry.
Interesting. How so?
Well, he believes that a new government focused on lowering energy prices and enhancing competitiveness could provide a much-needed boost to the sector. And Deutsche Bank economists suggest that this two-party coalition could also lead to increased defense spending.
Which ties into President Trump's push for European NATO allies to ramp up their defense budgets.
Exactly. And with those heightened global tensions we keep discussing, the pressure is likely to continue. Now, shifting from potential increases in spending to some actual big money deals, Prosus, a Dutch tech investor, is making waves with its planned acquisition of Just Eat Takeaway.
That's the European food delivery giant, right?
Right.
What's the deal worth?
Bloomberg reports the deal is valued at a whopping $4.3 billion. This positions Prosus to become a major player in that European food delivery market.
Wow, that's a lot of takeout. What does this mean for competitors like Uber Eats and Deliveroo?
Well, the competition in that space is fierce, and this acquisition could definitely shake things up. It'll be interesting to see how they respond. Now remember, Perpetual, the company whose deal with KKR fell through?
Yes. I was wondering what would happen with that.
Well, CNBC reports that they're planning to pursue the sale of their wealth management business separately. It seems they're still open to a deal, just not the one with KKR.
Maybe they're aiming for a higher price, or perhaps they're reassessing their strategic priorities. It's a reminder that even when a deal seems imminent, things can change quickly.
Absolutely. Now, shifting gears again, BAE Systems, Britain's largest defense firm, just landed a major contract with NASA, according to CNBC.
A defense firm working with NASA, that's an interesting combination. What's the deal about?
The contract is worth $230 million, and it involves building spacecraft for NASA's Lagrange 1 series project. It's a long-term project set to run from 2025 to 2035.
So BAE Systems has secured a steady stream of revenue for the next decade. That's a pretty smart move.
It does raise questions about the increasing involvement of private companies in space exploration. It's a trend we're seeing more and more, and it has implications for both the commercial and scientific aspects of space travel.
Definitely a topic worth exploring further. Now, we've covered markets, corporate strategies, and even delved into the world of instant noodles. But there's one more crucial piece of the puzzle we need to examine. Those overarching global trends.
Right. And those trends are all interconnected. Rising inflation, the potential for a global recession, escalating tensions surrounding trade and defense. Understanding those connections is key to navigating the current economic landscape.
You've mentioned several times that inflation and recession fears seem to be top of mind for investors right now. Can we unpack that a bit more?
Absolutely. Inflation has been a persistent issue for many countries, and it's driving uncertainty in the markets. Investors are watching for signs that inflation is easing, but the data has been mixed.
And the Fed's recent interest rate hikes haven't exactly calmed those fears?
Right. The Fed is trying to walk that tightrope between controlling inflation and avoiding a recession. which isn't an easy feat.
Especially with President Trump's policies potentially adding another layer of complexity.
Exactly. His focus on deregulation and tax cuts, while intended to boost economic growth, also has the potential to fuel inflation. And then there are the tariffs, which are already impacting global trade flows and raising prices for consumers.
So the tariffs are a bit of a double-edged sword. They might protect some domestic industries, but they also come with costs for consumers and businesses.
Exactly. And the impact of those tariffs is a major point of contention, not just between the U.S. and its trading partners, but also within the U.S. itself. There's a lot of debate about their long-term effectiveness and their overall impact on the economy.
So a lot of uncertainty swirling around the economic outlook, both domestically and globally.
That's why investors are increasingly seeking safe havens for their money. We see this in the rally in Treasury bonds, even with the concerns about the debt ceiling.
So even with the political drama, investors still see U.S. government debt as a relatively safe bet?
It's a sign of the times. When uncertainty reigns, investors tend to prioritize safety over potential high returns. And then, of course, there's the looming question of a potential global recession. The recent economic data following U.S. Treasury yields weak consumer confidence readings, a slowdown in global trade. Those are all red flags.
So all these factors combined are creating a pretty volatile and unpredictable environment for investors.
Exactly. It's more important than ever to stay informed, to be cautious, and to diversify your investments.
Now, amidst all this economic doom and gloom, there are some bright spots. We talked about Nissin Foods and their confidence in the instant noodle market.
Yes. They're investing in growth and innovation, adapting to changing consumer preferences, and demonstrating that even in turbulent times, there are opportunities to be found.
It's a good reminder that there's always another side to the story.
Absolutely. Now let's circle back to a few key players we've discussed: NVIDIA, Tesla, and the Magnificent Seven.
Right. Big names with potentially big impacts on the market. What are your thoughts?
Well, NVIDIA's upcoming earnings report is generating a lot of buzz. MarketWatch is reporting that option traders are predicting a potential 9% swing in share price, highlighting the company's influence on both the tech sector and the broader market.
So their performance could either reignite the AI-driven rally or send shockwaves through the tech industry.
Exactly. It's a pivotal moment for them. And then we have Tesla, whose recent stock plummet has raised eyebrows with their market cap dipping below $1 trillion. While Chinese EV makers like XPeng and Li Auto are rallying, Tesla seems to be facing some headwinds.
The EV market is becoming increasingly competitive, and Tesla's no longer the only game in town.
Yeah, their ability to adapt to this new landscape will be key to their future success. And speaking of adaptation, the Magnificent Seven, that group of mega-cap tech stocks, are also facing challenges.
MarketWatch reports they're experiencing their worst day since December 2024. Even the giants aren't immune to market volatility.
It suggests that the era of unbridled tech dominance might be coming to an end. Investors are becoming more discerning, and companies that fail to adapt to changing market conditions will likely face consequences.
So a time of transition and uncertainty, even for the biggest players in the market.
Now, taking a step back, we've seen how global trends from rising inflation to the potential for a recession are shaping investor sentiment and driving market movements.
And how those trends are impacting corporate strategies.
BlackRock reevaluating its DEI initiatives, Nissin Foods investing in the instant noodle market. These are all responses to the shifting economic and social landscape.
The world's in a state of flux, and it's more important than ever to stay informed.
Absolutely. Knowledge is power, especially in times of uncertainty.
And speaking of uncertainty, there's one more big question I wanted to touch on. The role of government in all of this. How much should governments intervene in the markets, and how much should they let the free market run its course?
The age-old debate.
Yeah.
It's a complex issue with no easy answers, but it's a question we have to grapple with.
We see governments taking various approaches. The U.S. with its focus on deregulation and tariffs. Singapore trying to address those cost of living pressures. And now in Germany, the new government's stance on defense spending and economic competitiveness will likely have significant implications.
Government policies have far-reaching consequences impacting businesses, investors, and individuals globally. It's a reminder that economics is not just about numbers and charts. It's about people, their livelihoods, and their futures.
That's a powerful point. It brings a human dimension to these often abstract economic discussions.
Exactly, and it underscores the importance of having these conversations, of understanding the forces at play, and of considering different perspectives.
Yeah, before we get too philosophical, let's bring things back down to earth.
Yeah.
What are some key takeaways for our listeners from all this?
Well, the global economic landscape is in a state of flux. There are both opportunities and challenges ahead, and investors need to be cautious and informed.
Don't get swept up in the hype of those momentum trades.
Right. Do your research understand the risks involved and focus on long-term strategies?
And stay informed about global trends and how they're impacting different industries and regions.
Absolutely. But it's not all doom and gloom. There are companies and sectors finding ways to thrive and innovate, like Nissin Foods and their instant noodles.
Sometimes a bit of comfort food and a reminder that simple pleasures endure is all we need to navigate these challenging times.
Well said. Now, before we wrap up this deep dive, I want to leave our listeners with a thought-provoking question.
Ooh, I love a good thought-provoking question.
In this era of economic uncertainty, what are the most important skills or qualities for individuals to cultivate in order to not just survive, but thrive?
Ooh, that's a good one. It's something I've been thinking about as we've discussed all these companies and individuals navigating these turbulent waters.
One thing that stands out is adaptability. The world is changing at an incredibly rapid pace, and the ability to pivot, adjust strategies, and embrace new technologies is crucial.
Resilience is another big one. We've seen companies face setbacks, deals fall through, and markets take unexpected turns. Bouncing back from those challenges, learning from mistakes, and persevering, that's how you stay in the game.
And let's not forget critical thinking. We're bombarded with information from all sides, often with conflicting narratives. Being able to cut through the noise, evaluate sources, and form your own informed opinions is more important than ever.
Absolutely. It's like having your own mental BS detector.
Exactly. And in a world increasingly driven by technology and automation, it's easy to lose sight of the human element. So those soft skills, empathy, communication, collaboration, those are always going to be valuable.
Because at the end of the day, it's our ability to connect with each other, understand different perspectives, and work together that will determine our collective success. Whether we're talking about global markets, corporate strategies, or even just navigating our daily lives.
Well said. So to our listeners out there, stay curious, keep learning, and embrace the complexities of this ever-changing world.
And we'll be back tomorrow morning with new headlines from major financial magazines. Till then, happy investing, everyone.
Yeah, it really is interesting. When you think about risk management, because even these like safe havens are getting hit with volatility. I mean, remember those T-bills we were just talking about?
Yeah.
Investors are starting to look at those with a little more caution now.
Is it because of that whole debt ceiling fight?
Yeah.
Feels like such a wild card.
It really is. It's just throwing in all this uncertainty into what's usually a very stable market. I mean, MarketWatch even points out that the yields on T-bills maturing in late July and August, right when that whole debt ceiling showdown is supposed to happen, are way higher.
Yeah.
Investors are basically demanding a higher return because of the risk, even though default is considered highly unlikely.
So no more T-bill and chill then, huh?
Not so much these days. But let's shift gears a little bit, talk about something a little more positive. Bloomberg's got this article about Nissin Foods, the maker of cup noodles.
Oh, yeah.
And they're planning on making some big investments.
Instant noodles. A true sign of the times.
Oh.
It always amazes me how some products just seem to thrive no matter what's happening in the economy.
Yeah, I mean, it's comfort food, it's affordable, and it's adaptable to so many different cultures and tastes. I mean, even Nissin Foods CEO is saying he's optimistic about the demand continuing to grow. And they're even expanding beyond the classic cup noodles,
Oh, yeah.
They're pushing for healthier options, trying to appeal to those health-conscious consumers.
Right.
Really reflecting those evolving trends.
It makes you wonder what the future holds for instant noodles. I mean, maybe we'll be seeing gourmet organic ramen becoming all the rage.
Maybe so. But let's not get carried away with noodle dreams just yet. We got a lot more to get through. And speaking of things to cover, do you remember those election results that came out of Germany over the weekend? Bloomberg had an article.
Oh, right, yeah.
The conservative Christian Democratic Union and their allies, the Christian Social Union, they got the largest share of the votes with Friedrich Merz as their chancellor candidate.
Yeah, that's a pretty big shift in the political landscape.
It really is, and it's got these interesting implications for the German economy and their role in the European Union. Bloomberg even quotes Michael Field, a chief equity strategist over at Morningstar, and he's saying that this could actually be a good thing for the struggling German auto industry.
Interesting. How so?
Well, he thinks that a new government that's focused on things like lowering energy prices and making Germany more competitive could really help out the auto sector. And then there's Deutsche Bank economists who are suggesting that this two-party coalition could lead to an increase in defense spending.
Which kind of plays right into President Trump's whole push for European NATO allies to boost their defense budgets.
Exactly. And with those global tensions, we keep talking about, that pressure is probably going to stick around. Now let's move on from potential increases in spending to an actual big money deal. Prosus, a Dutch tech investor, is planning to acquire Just Eat Takeaway.
Oh, yeah, that's that European food delivery company. What's the price tag on that?
Well, Bloomberg's reporting it's a whopping $4.3 billion.
Wow. This is going to make Prosus a major player in that European food delivery market.
That's a lot of takeout orders. What do you think this means for like Uber Eats and Deliveroo, all those other competitors?
Oh, the competition is definitely heating up in that space, and I think this move is going to shake things up. It'll be interesting to see how those other companies respond. Now, remember, Perpetual, the company whose deal with KKR fell apart.
I was wondering what was going to happen with them.
Well, CNBC's reporting that they're planning to try to sell their wealth management business, but as a separate deal this time.
Oh, okay.
So it seems like they're still open to making a deal, just not that one with KKR.
Yeah, maybe they're holding out for a better price. Or maybe they're just rethinking their whole strategy. It just goes to show that things can change really quickly, even when a deal seems like it's about to happen.
It really does. Now, switching gears again, BAE Systems, Britain's biggest defense company, they just landed a big contract with NASA.
Oh, wow.
Yeah, according to CNBC.
A defense firm working with NASA. That's kind of an interesting combination. Yeah, it is. The contract's worth $230 million, and it involves building spacecraft for NASA's Lagrange 1 series project. It's going to run for a while, too, from 2025 to 2035.
So basically, BAE Systems has got a nice, steady stream of revenue coming in for the next decade. It's pretty smart.
It is. It also raises some questions, though, about private companies getting more and more involved in space exploration.
Right.
It's definitely a trend we're seeing more and more, and it makes you think about the implications for both the commercial and scientific sides of space travel.
That's a whole other discussion we could have for sure.
Yeah.
Okay, so we've looked at markets, corporate strategies. We even talked about instant noodles. But there's one more really important piece of the puzzle to examine, those overarching global trends.
Absolutely. And they're all connected, rising inflation, a potential global recession, those escalating tensions around trade and defense. I mean, understanding how they all fit together is key to navigating this whole economic landscape we're in.
You've mentioned a few times now that inflation and recession fears seem to be top of mind for investors. Can we dig into that a little more?
For sure. I mean, inflation has been a problem for a lot of countries, and it's creating all this uncertainty in the markets. Investors are looking for signs that it's easing up, but the data's been kind of all over the place.
And the Fed raising interest rates hasn't really helped calm things down?
No, it hasn't. They're walking this tightrope, trying to keep inflation under control without causing a recession. It's not easy.
And then you throw in President Trump's policies, and it adds a whole other layer to it.
Right. His focus on deregulation and tax cuts, even though it's meant to boost economic growth, could actually end up fueling inflation even more. And then there's those tariffs.
Oh, yeah.
Which are already messing with global trade and driving up prices for consumers.
It seems like those tariffs are kind of a double-edged sword.
Yeah.
I mean, they might be helping some domestic industries, but they're also costing consumers and businesses more.
Exactly. And the impact of those tariffs is causing a lot of debate, both between the U.S. and its trading partners, but also within the U.S. itself. I mean, are they effective in the long run? What's the real impact on the economy? It's a big question.
So there's just a ton of uncertainty about the economic outlook, both in the U.S. and globally.
Exactly. And that's why you see investors putting their money into those safe haven assets, like we were talking about with the Treasury bonds, even with the debt ceiling concerns.
So even with all the political drama going on, the U.S. government debt is still seen as a relatively safe bet.
It's a sign of the times. When things are uncertain, investors tend to play it safe, even if it means lower returns. And then, of course, there's that looming question of a global recession. I mean, just look at the recent economic data falling. U.S. Treasury yields, weak consumer confidence readings, the slowdown in global trade. It's all kind of pointing in that direction.
Yeah, all of that combined makes for a very unpredictable environment for investors.
Exactly. It's more important now than ever to stay informed, stay cautious, and diversify those investments.
Don't put all your eggs in one basket, as they say. But hey, even with all this economic doom and gloom, there are some bright spots. We were talking about Nissin Foods and how confident they are in the instant noodle market.
Absolutely. They're investing in growth. They're innovating. They're adapting to what consumers want. It just shows that even when times are tough, there are still opportunities out there.
Yeah, it's a good reminder that there's always another side to every story.
Definitely. Now, I want to circle back to a few of the big players we discussed earlier, NVIDIA, Tesla, and those magnificent seven.
All right, big names with potentially big impacts on the market. What are you thinking?
Well, everyone's talking about NVIDIA's upcoming earnings report. I mean, MarketWatch is reporting that option traders are predicting that share price could swing by as much as 9%.
Wow.
It shows just how much influence they have on not just the tech sector, but the whole market.
So basically, they could either really boost this whole AI rally or send the tech industry into a tailspin.
Exactly. It's a big moment for them. And then there's Tesla. Their stock has taken a pretty big hit recently, and their market cap is now under $1 trillion. While those Chinese EV makers like XPeng and Li Auto are doing really well, Tesla seems to be hitting some roadblocks.
Yeah, well, the EV market's getting more and more competitive. Tesla's not the only game in town anymore.
Right, and how well they adapt to that is going to determine their future, I think. And speaking of adapting the Magnificent Seven, those giant tech companies are also facing some challenges.
MarketWatch says they're having their worst day since December of 2024. Even the giants aren't immune to market volatility, it seems.
It really makes you wonder if this whole era of tech dominance is coming to an end. Investors are being more careful, and companies that don't adapt to the changing market, well, they're going to feel it.
A time of transition and uncertainty, even for the big guys.
Exactly. Now, zooming out a little, we've seen how those global trends, things like inflation and a potential recession, are really impacting how investors feel and what they're doing in the market.
And those trends are impacting corporate strategies, too.
Right, like BlackRock rethinking their DEI approach and Nissan Foods investing in instant noodles. It's all a response to this changing economic and social landscape we're in.
The world's definitely in flux. It's more important than ever to stay on top of things.
I completely agree. Knowledge is power, especially when things are uncertain.
That's for sure. And speaking of uncertainty, there's one more big question I wanted to bring up. The role of government in all of this.
Yeah.
I mean, how much should governments be involved in the markets, and how much should they just let the free market do its thing?
The age-old debate. It's a tough one. It's complicated. There's no easy answer. But it's something we have to think about.
We see different governments taking different approaches. The U.S. with its deregulation and tariffs, Singapore trying to deal with those cost of living pressures, and now Germany with its new government and their stance on defense spending and being more competitive. It's all going to have an impact.
Definitely. Government policies have big consequences for businesses, investors, and people all around the world. It reminds you that economics isn't just about numbers on a spreadsheet. It's about people, their lives, their futures.
That's a good point. It puts a human face on all these complicated economic discussions we have.
Exactly. And it just highlights how important it is to talk about these things, to really understand what's going on, and to consider different points of view.
For sure. Now, before we get too philosophical here, let's bring it back down to earth. What are some of the key takeaways for our listeners from all of this?
I'd say the global economy is unpredictable right now. There are opportunities out there, but there are also a lot of challenges. Investors need to be cautious, and they need to be informed.
Don't get caught up in the hype of those momentum trades.
Exactly. Do your research, know what the risks are, and think long-term.
And stay informed about those global trends and how they're impacting different industries in different parts of the world.
Absolutely. But it's not all doom and gloom either. I mean, look at Nissan Foods and their instant noodles. They're finding ways to thrive and innovate.
Yeah, sometimes you just need a little comfort food and a reminder that the simple things in life are still around.
Well said. Now, before we wrap up this deep dive, I want to leave our listeners with something to think about.
Oh, I like that. Give us a good thought-provoking question to ponder. Okay, so as we wrap up this deep dive into all these market trends and global happenings, what's the big question we should leave our listeners pondering?
Well, in this time of economic uncertainty, what are the most important skills or qualities for people to develop to not just survive, but really thrive,
That is a good one. It's something I've been thinking about a lot, actually, especially as we've been talking about all these companies and people dealing with all these ups and downs.
One thing that really stands out to me is adaptability. I mean, the world is changing so fast, and being able to shift gears, adjust your strategies, and embrace new technology is essential.
Yeah, and resilience, too. We've seen companies hit those roadblocks, deals fall apart, markets go haywire. Being able to bounce back, learn from those mistakes, and keep going. That's what keeps you in the game.
Absolutely. And let's not forget about critical thinking. We're constantly bombarded with information from all sides, and a lot of it is conflicting. So being able to cut through all that noise and evaluate sources and form your own opinions, that's more important than ever.
It's like having your own personal BS detector.
Exactly. And with technology and automation taking over more and more, it's easy to forget about the human element. So those soft skills, things like empathy, communication, collaboration, those are always going to be valuable.
Yeah, at the end of the day, it's our ability to connect with each other, to understand different perspectives and work together that's really going to make the difference. whether we're talking about the global markets or business strategies, or even just navigating everyday life.
Well said. So, to all our listeners out there, stay curious, keep learning, and don't be afraid of the complexities of this world.
It's a wild ride for sure. And we'll be back tomorrow morning with more news from the financial world. Until then, happy investing, everyone.